2020 is finally coming to an end.
Woo!
And a lot of changes are coming. Some are good, some are not so good. Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us on this chilly day.
Yes, happy holidays everyone.
Merry winter.
Merry
Winter has arrived. I think we had fall for like what, a day and a half?
Yes,
about a day and a half we had
did.
fall.
And we've had winter now for a day and a half. So
now,
summer will be back,
a couple
folks.
of days.
Don't worry. Yeah.
A couple of days.
We even got the balmy fire going today.
I know,
so
look at that. Nice. Look how lovely our Christmas set looks.
It actually looks good.
It does.
I love
love our Christmas
What I was
set.
wondering was which stocking was mine up there and what's in it.
I don't know.
I know.
How exciting.
I know. Well, you know what? People don't watch this show to talk about us. So we should give them some good information.
That's a good idea.
Yeah, no, I'm just kidding. We know you love to watch and enjoy our
Because we're
banter.
funny.
Yeah, because we think we're funny.
We think we're hilarious.
So if you stick around, you might learn something and you might get a chuckle somewhere along the way. Okay? So we've got a lot of things happening. We're all excited. 2020
so much is coming to an end.
Yeah, people are like, and it's so funny how you know when you talk to people, they feel like we've been through a lot this year, and I know people feel like 2020 is coming to an end, and it's like a new beginning.
I know.
Because we want to forget 2020. But there's been a lot of good things that happened this year.
They want to forget all the bad, and there has been a lot of bad. Some people think it's been all bad, but it hasn't. You know, I think a lot of good things, I hate to say it, have come from this. I think people are going to be more aware, and they're going to, I think, start taking better care of themselves and being a little bit more proactive about protecting themselves, washing their hands more often, for example.
Which we
things
should
like
be
that.
doing anyway.
Right, and I don't know. I just think so. I think that there's definitely some more better awareness that has come out of all of this.
And the real estate market, some good things have come on it. We've learned that even during a pandemic, people can buy a house. People can still look at a house. People can close on a house. We've also learned that
they just can't do it by year end right now. Sorry.
Yeah, let's segue into that, right? I know.
He says he moves the show.
Yeah, move it along. Go ahead. Tell him. And that's so funny you bring that up because, we know.
But I'm actually not talking about that yet.
No, we're not. But the volume is super high right now because interest rates are
super low.
Historically super duper low.
Very historically, as in never, ever had we had interest rates in the twos. I know I've only been doing this for 40 years.
It's hard to believe.
But for 40 years, they've never been in the twos. And I know before that too, because,
and remember,
ever since they've been monitoring interest rates, they've
remember
never
when we did our year-end show last year and we showed what all the economists thought the rates would be and the market would be.
Everyone said they were going up.
They were going up. We were going to be in the fives, folks.
Yes.
So.
And here we are in the twos.
Hey, don't shoot the messengers. We just, we're experts in what we do.
Right.
But we're not complete experts on what can happen in a market and an economy. It's very
we're not
unpredictable.
Controlling it, we just follow it.
No. And
just like the mortgage rules. We don't make them, we just follow them.
And we talk about this a lot, but I feel like if, because of the volatility, you should lock in. You just don't know.
I definitely would as well. I don't. Is there that much difference between 2 and 1.5 and 2 5/8. You know,
Depends.
An eighth of, I know, it depends on how big your loan amount
The
is.
bigger your loan is, the bigger the impact is.
And the other thing you have to remember, this is totally not on our list, by the way, but it's good information for people to have. The other thing that you definitely want to keep in mind is term. How long are you going to be living there? Because if you're only going to be living there a couple more years, it's a stepping stone house for you, then perhaps it's not worth refinancing. So don't let somebody just like, oh my gosh, these rates are great, and just do it. We've had a few people who have jumped on that bandwagon and refinanced, and then 3 months later they're selling their house.
Yep.
Oops, hey, time for Civic Affairs Committee meeting.
Oh, you better get out. Gotta go. Thanks for watching. All right, so let's move on to what's going on that affects all of us right now. I mean, let's talk about the forbearances.
Yeah,
Where
I
are
was
we
just
at
going to
with
say,
the
we have to
forbearance?
kind of start with the stuff that has been continually growing, unfortunately. So right now there are over 2.4 million people in the United States that are in forbearance on their mortgages right now. So you sit there and say, well, that doesn't affect me. Yeah, it affects all of us. So basically what that means is when you have 2.4 million people not making their mortgage payments, there are businesses who rely on receiving those payments so that their businesses can continue as well. And everyone thinks, oh, the financial industry, they have all the money, and that's not necessarily the case. It's a roll down or a trickle down effect,
Sure.
and it's going to affect
It's
all of us
Reaganomics.
eventually. It's Reaganomics. There you go. So right now with 2.4,
That was, by the way, that was a political thing. Can you?
and a good one.
Yeah. Should we remove that? I'm just kidding. I know we might offend people with that, right?
Somebody said yesterday, all the political stuff is over.
It's never over.
Yeah,
It's never
I don't think
over.
so. Anyway, so with everyone in forbearance, so here's how it's going to affect all of us. Right now, with the people not making their mortgage payments, so when you make your mortgage payment to whoever you make your mortgage payments to, they are called a servicer. So they receive a servicing fee for doing that. As you guys, I've said it before, you may or may not remember, but all mortgages are sold on the secondary market, which means the mortgage is actually on Wall Street. So they package them in these big $1 million, billion-dollar bundles or whatever, and they sell them to investors on
I thought
Wall
it was
Street.
a gazillion.
Gazillion. Mortgage-backed securities. You probably have heard that phrase. That's who invests in the mortgages. And the servicer, who you actually make your payment to, they get a fee for collecting it, processing it, and then they are paying the Wall Street people. So when that's not happening, that's a lot of people affected. They're going to make up the money somewhere, right? They're going to make the difference. Here's where it comes to affecting all of us.
Well, under the CARES Act, people feel like they don't have to pay that mortgage, and like you said, because they can't foreclose on you right now. We don't know if that's going to be renewed or not renewed. But like you said, it's got to come from somewhere. We can't just keep printing money and letting people not pay. At some point, they got to pay it back. So now a adverse market fee just came into effect for all refinances. What does that mean? Well, Fannie Mae, Freddie Mac, not Barry and DeLynn, we have not implemented this penalty. It's a adjustment to your rate to help recoup some of the losses that are incurring from the forbearances, which means simply if you're refinancing now versus last month, even though, depending on the rate, they are tacking on a small adder to that rate for doing a refinance versus a purchase. It doesn't affect a purchase yet.
I was just going to say
So, at some point though,
it wouldn't surprise me if they started
doesn't, yeah.
doing it
We-
across the board for all types of loans and
So,
products.
it has to come from somewhere, right? We can all just stop paying.
No.
And say, oh, it doesn't hurt me, And for those of you who don't need the forbearance and are taking advantage of the non-foreclosure thing, I would encourage you to catch up, because if you don't need it, why are you taking it? You're going to have to
Right.
pay it back. You don't know what it's going to look like on the other end. Honestly, it could be dangerous to you. So.
And because this is not, it is not government mandated how every single lender or mortgage servicer has to do it. They're allowed to do it how they want. So some people are saying if you do a 3-month forbearance, month 4, the whole thing is due, right?
Right.
Other people are letting you space it out and catch it up over the next 6 months. And other people are adding it to the end of the loan. I will say very few are adding it to the end of the loan because they don't want to wait until the 30th year of your loan to get their money back.
Yes.
So they're definitely going to try and catch it up quicker.
And it does.
And that puts a huge impact on people financially.
And anybody who wanted to take advantage of these low rates that went into forbearance now has to wait 3 months before they can enter back into being considered for a refinance. Even though your credit's perfect, even though they didn't report it, it doesn't matter. You're in forbearance. You become a higher risk. Like it or not, those are the facts. So, you know, rates might be super low now. You went into forbearance in September. You got to wait till you caught that payment up and you waited 3 months. So keep that in mind.
3 consecutive
On
payments
time,
made on
yeah.
time after you came out of forbearance.
So keep that in mind if you're going to go into forbearance. And I know, you know, it sounds great.
This is why we say try not to.
Yeah.
Please try not to.
Yeah, because you took a forbearance. Now we have an adverse market rate fee for everybody who wants to refinance.
It's not good
I'm
for
just kidding.
anybody. It's not good for you guys, and it's not good for the economy and everything. And just try not to. I've said it a million times. You know, do it on your car loan because they're offering some things. The electric company is working with people. The cable people are working with people, splitting up payments, things like that. Try and do everything else except going into forbearance on your mortgage.
Hey, we're helping people
We
with
get it.
payments due to COVID too.
I know, and we probably should mention that again too. Maybe we'll wait for the end of the show.
End of the
and
show,
we'll
we'll
do that.
tell you how we can get you some help.
Yes.
And there's
yes.
no strings attached, okay? All right.
All right, so let's move on. So that being said, number 2, we're talking about year-end stuff. So while we are still on 2020, as we wrap up, here we are in December. This year went very fast, I think, for a lot of people. It was
Some people it went really slow for.
Yeah, I know, but for the most part, and you know what it is? I think I do this a lot too. So you're anticipating, oh, this is going to be over pretty soon. This is going to be over pretty soon, right? Remember
Right.
in
Yep.
March, we all thought it was going to be over by July, right? So so you're like, you know what I mean? So you're constantly thinking down the road.
Sure.
Oh, as soon as this is over, we'll do this. As soon as this is over, we'll do this. Well, you know,
This could be the new normal.
life will start, things will go. And then all of a sudden, here we are in December, and it's
Right.
not over. So
Right.
we're like, okay, all those things I was supposed to do, I didn't do. So I think that's why I think it feels like the year just zoomed by. But anyway, so what we did want to talk about for year-end purposes, patience. COVID is not over, and we're requesting patience. As Barry said, the rates are very, very low. Everyone is refinancing right now. A lot of refinancing going on, and a lot of purchases are going on. All of you realtors, you know that. You're very busy right now. A lot of this is going on, so be patient with underwriting and such. Turn times are taking a little bit longer. Everyone and their brother, obviously in the state of Florida, wants to get their financing, their purchase done by year end. And most companies, I know our company
Excuse me,
is definitely.
That was a sexist comment. Everyone and their sister, not their brother. You got to include both. All right? We're not allowed to talk politics, and we have to be,
politically correct.
Yes,
So
that's it.
every person. But
And their
they
brother
do.
and sister. There you go.
So there you go. So everyone is trying to close by year end for obviously homestead purposes. We would love to get you close to. We are, and when I say we, I mean industry wide. We are all working our tails off. We would love to get you all in and close by December 31st as well for homesteading purposes on those purchases. We are putting purchases under priority. We are, I'm sure all of the other companies out there are as well. So we're trying to do the best we can. However, we can use your help. You know, complete contracts, help with the documents if need be, help jiggle our clients because sometimes they don't know how important it is and how long it takes to get things done.
If your lender requests something from you, you got to get it back to them ASAP because it's got to go through this.
And when we say ASAP, we mean like within an hour.
Yeah, not like,
we don't,
I'll get
we don't
to it
mean
the-
like I'll get to you that on Friday.
Yeah, or
No.
this weekend. Oh yeah, I got to go find that. No, you need to go
We mean
home
like
and get
an
it now.
hour.
Yeah.
And we need it back. So if we have any hopes of getting these things closed by year end, that's what we need. We need participation from everyone. No finger pointing and accusing and things like that. Let's just all pitch in together and try and get these things done. So we do request patience.
We're at the point where it's not really feasible unless you have a cash closing to close before year end.
It's not.
Yeah, it's just not.
Yeah.
People have asked, and I've said no.
If you're signing a contract now.
Now,
you know,
if somebody
we are
tells
the
you
second
yes
week
and
in
they're getting
December.
finances, be leery, because appraisals are still 10 to 14 days.
Right. They're very busy too. Just patience. All right.
Yes.
So let's move on. Moving on. So let's talk about some of the changes that are coming up. Yay! Should we do the good changes first? Or the bad changes first? I'm going with good.
All right.
Okay. Mr. Indecisive. Loan limits have gone up. I know that we have kind of like teased about that during the week.
I wanted to talk about something good last, but we'll finish with something on a positive.
Okay. So the loan limits are going up. So what does that mean? So every year, almost every year, not every year, but almost every year, they've been raising the loan limits because home values are going up. So, you know, the Fannie Mae loan limits have been increased. Used to be $510,400. Anything over that was considered jumbo. Now that limit is going up to $548,250. So that adds quite a bit onto the, because of the values of the house have gone up. So now, and if everything under $548,000 is considered Fannie Mae, which is good because the rules change. What that basically means to you, the rules change if you go over that size in a loan amount,
No, not a purchase price. Yeah, people get confused with that. That means I can't buy a house for $700. Yeah, you can, but if you want to fall into conventional guidelines,
yes,
you need to put $150,000 down. Before you would have to put $190,000 down.
Right. So the guidelines change over that amount, and they get stricter. Just
it becomes
the way
what we call a jumbo loan.
Correct.
And you don't want to do a jumbo loan
it's
if you can
stricter.
do conventional.
Rules are stricter.
The rates are higher. And the on your jumbo. The guidelines, the rules are stricter. They'll ask for like 3 years of tax returns versus 2. You think, we prick your finger.
Because it all has to do with risk.
It's risk.
The lender is taking a huge risk lending, $750,000 to someone.
Your down payment
they're going to ask you for a lot more papers.
Your down payment requirements are higher. It's a rippling effect. So the other one, the big one that came out, and it always follows suit, you just don't know exactly when, is FHA increased their loan limits as well this week. So
they did. Gosh, they were stuck at like 250, I think it was, for years. Remember, it was like for years it was stuck there.
Now with this
now with the last couple of years, every year it's gone up. So the new FHA loan limit has now gone to 356, 362. It's always a wacky, weird amount.
There's a reason for that. Because it's 65% of your conventional loan limits. So, and what does that mean to you as a realtor, as a buyer? That means that your FHA people who have maybe less money to put down, maybe they have boo-boos on their credit, you like that word, boo-boos?
Or they just have a lot of debt.
Or they have a lot of debt and they need higher debt ratio. It means they can go up to a $356,000. Now, that's Tampa Bay area.
And the old one was 331.
Right.
Yes, and you're right.
It's not a worldwide. We're talking Tampa Bay area. So
conventional is definitely nationwide.
Yes.
But FHA is definitely location restrictive.
So if you go to like
areas,
Nashville, in Nashville, it's up almost as high as their conventional on FHA.
Actually, I saw high cost areas like 800,000 or something. Yeah. High cost areas. Can you imagine an $800,000 FHA loan?
No.
I can't even say it without laughing.
But no. You know what? And it really makes a difference in our market to the pool of buyers that can qualify for, that $356,000 loan size. Probably, that's probably what, 370 on a purchase, 380. What is that?
Right.
3.5% down.
Purchase price. I don't have my glasses, so I can't go to my calculator.
It is. So anyway, those people will now be able to get that much more house under the FHA loan limit. So it's a positive for the industry for sure.
It is.
To see that increase.
It's another boost. This is 2 years in a row, 3 years or 4 years in a row.
And actually, I know it says it starts next month, but we can start now.
Yes.
Which is amazing. So bring them in. And you know what? And I want to reiterate this. FHA is a wonderful loan. Do not steer people away from FHA, and don't tell your sellers, oh, you don't want to accept an FHA contract. Those borrowers are iffy, or the inspections are tougher and all that. don't shy away from them. I'm telling you, it's a great loan. It's a government-insured loan. The only time you need to shy away from FHA is if it's a flip. If you're listing a flip, go conventional.
Right.
That's the only reason to not go FHA today.
They say, oh, FHA is too strict on the appraisal. Guess what? So's conventional.
It's the same. It's the
They
same.
follow the same
Get it out of
rules
your
and
head.
regulations.
You're thinking old school. Get up with the new wave. I know some of you realtors have been doing this for 100 years, and things change. FHA is a great loan program, so don't be
Yes.
afraid of it. And our borrowers are getting amazing rates now. I mean, under 700, you don't even want to touch a conventional rate. It's not pretty.
I know.
It's
Depending
not
upon
pretty.
credit score. So don't scare people away. You're going to lose a sale if you're saying don't go FHA. You
Yeah.
could potentially be losing a sale because that might be the better program for that particular borrower. Let your loan officer determine what the best program is for the borrower. Just don't be afraid.
Yes.
Don't be afraid.
I like it. I like it a lot.
I like
okay,
it.
new loan limits are in place. So there's our next tip.
So there's the change. Now, self-employed people. So here's another change that's coming with self-employed people. So
Wah,
I
wah,
know.
wah.
Well, I guess the thing that I wanted to say about he's just wah-wahing over there. I think the thing that I wanted to say about self-employed people is now is the time. So if you're planning to buy, we're coming to the end of 2020. So if 2019, maybe your books didn't look that great, or 2018, maybe you started the business or you changed the business, and so the income wasn't that strong in 2018. As everyone knows, we have to do a 2-year average of income on a self-employed person. So if we were averaging 18 and 19, and 18 was so-so, and 19 was started to grow a little bit, this is your chance. So we're coming to the end of 2020. If your intent is to buy sometime in the spring of 2021, then get your books together now. Start getting things together now. We are happy, and I'm sure other loan officers are too, to help you with that. Take a look at it. We are going to tell you, try not to write off every single expense under the sun, because we use the net. You make $1 million, but you write off
$1 million.
$900,000 of it, then your net is $100,000, and that's all we can use for qualifying you for a home. So keep that in mind when you're writing things off, and we're doing a 2-year average. So this is the time to make 2020 look as strong as you can if you're looking to buy in the spring.
Good tip. Good tip, because a lot of
you.
people panic and they're like, oh, I want to buy a house this year. You need to be ready now,
Yes, start getting it ready now.
Yeah,
Start
and
getting
if
it
you
ready
need
now.
if you need tips on it, we're here to help you. We can help you qualify and tell you, here's, if you show this much income, you'll qualify for this. If you make that much
We'll even
income,
talk
you'll
to your
qualify for that.
accountant.
Yes.
We've done that as well. Talk to people's accountants so that we're all on the same page to help you buy a house.
Your debt ratio, along with, we talk about credit score, but your debt ratio is everything. And,
Yes.
And when you're buying a house, it's so important.
Yes.
Okay, so we're
All right.
going to get ready. Other things going on for self-employed people, not so good.
Yeah.
So,
I know he wants to end on a good note, but here's a couple of not so good things.
so MI insurance is changing as we know it, and people are like, "What the heck is MI insurance?" Well, when you're not putting 20% down on a conventional loan, there's an insurance policy that has to be paid for by you, and it does not insure your home. It insures the lender. The lender will require it. Fannie Mae, Freddie Mac, it's required. You're paying for it.
Nationwide. Doesn't
You're
make a
paying for it
difference
one
where
way
you
or
buy
another.
it.
Some people are like, oh, there's no MI. Well, then it's built into the rate. There are ways to do that. You can stack your MI. You can
PMI. They know it as PMI.
Yes. If you want to get into a loan now and you're self-employed and you're not putting 20% down, there is going to be an adjustment to your rate just for being self-employed. It never happened that way before. This is brand new. So it does affect your buying power on a house and, of course, your monthly payment, because there is going to be a reflection now on that rate based on being self-employed. Not only are self-employed people going to be affected, but anyone that has a prior foreclosure or bankruptcy will also be affected by these new PMI mortgage rates. So keep that in mind. It's here, it's coming. So make sure you disclose that up front. If you're self-employed, don't try to hide it. We're going to find it. That means if you got a 1099 from somebody, you're self-employed. Doesn't matter if you have another job, you are self-employed if you got a 1099.
I wonder, this is brand new to us too, so, and we will keep you posted as we learn more about it, but I was just thinking, you just said, don't try and hide it. Not that people would, but I'm wondering, does it make a difference if how if you have a regular job and then you do a side job, you sell, Mary Kay or something like that?
I don't know.
If we're not using the Mary Kay income.
Right. Do they get that?
Do they still have the adverse? We will definitely keep you posted.
Yeah. To just know the change is in the pipe. It's here. It's now. And it has a lot to do with the risk factors of what's going on in the real estate industry. Our industry is preparing themselves. They do not want another 2008, 2009.
2020 hit hard for everyone, across the board.
Yes.
And it's going to take a while to recover from this and recoup. So be prepared. This is, hopefully not as bad as it was in 2008, but it's definitely going to take some time. And look, it took almost 10 years for the recovery from 2008.
Yes, it did. And now we're booming.
10 years.
But they want to be prepared for what's on the other side of this boom. So don't be afraid of the market. I mean, the guidelines are so strict now. We're not going to have a housing crash. My opinion, we're not. It's just the appraisers are handcuffed now. The underwriters are handcuffed now. We're not putting loans through that are, oh yeah, you qualify. Those days are gone. I mean, anybody who's done a loan in the last couple of years will tell you, we did more than to get you through, okay? Loans are closing, but we have to weigh the risk. So it's out there.
Yeah.
Anyway, let's tell them about the CARES program we got going.
Yes.
If you need help with mortgage, if you need help with rent, our nonprofit charity has been honored and blessed to be able to help people that have been affected by COVID. You can go on our website, wpba.biz, check it out. There's links on there for information. If you want to...
We're paying lots of people's rent payments and lots of people's mortgage payments right now. So please, please, please don't think, oh, someone needs it more than I do. There is money available from the government. Help us give it to you.
Yes, and send an email to info@wpba.biz. We'll get you some help. And you got to live in Pasco County, though. We're only allowed to help local people right now in need. So anyway, great information this week.
I know.
Lots going on.
It's been quite a whirlwind of stuff. So
Yes, it
be
has.
prepared for all of the changes and everything that are coming our way. We will keep you posted as much as we can. Thank you for all who attended Lunch and Learn. It was a wonderful, although a little bit chilly. I don't know. My blood's thinned out. I've been down here 25 years.
Hey, share our show. Like it.
We are today and every day.
Moving forward. Have a great week.
Thanks, everyone. Bye-bye.